Samuel, good evening. Good evening. How are you? Can you hear me? Okay, guys. So, like I was, okay. Okichuku, good evening. Brian, good evening. I see you guys. So, like I was saying before we were interrupted, uh, tonight I'm going to show you guys how to analyze the market in the simplest form or in its simplest form, right? You don't have to complicate it. And like I already said, we might be having this section once a week, right? Where I'll get to analyze the market, show you guys the trades I'm going to be taking for the week. You can, execute the trade and make money or lose money, whichever ways. Or you could just learn from the process, right? So you can analyze the market by yourself. So I believe you guys can see my screen, yeah? Let me know if you can see my screen properly. Mhm. Okay, you guys can see my screen. So let's business. So, like I told you guys earlier, at this point you would want to have just few pairs you're trading, right? Don't complicate it. Get familiar with these pairs. Get to understand their movement and just stick with them. It's not about having multiple pairs. It's not about trading all the pairs, right? It's about finding pairs you can resonate with, pairs you can build a relationship with, right? So for me, these are the pairs I trade, just four pairs, right? So tonight we are going to analyze two pairs, gold and GBP USD. Right? So I'm going to, if you see very well, if you can see clearly, I took a trade on gold today that made me money, right? I took a trade on gold today that made me money, and I'm anticipating another trade here, right? This one is yet to activate, right? So I'm going to show you guys how I took this trade, right? So I'm going to, let me clean all of this markup. Also, GBP USD, I have a trade I'm also anticipating, right? Taking a trade from this marked zone, right? But I'm going to wipe off everything so we can start afresh. Okay, someone is asking a question. Good evening. Will the video be available on YouTube after the live section? Okay, what I'm going to do for you guys is, and this live question is meant for interaction. I'm going to teach you guys a strategy, and then we'll talk about it, right? Attend to your questions. But I'm also going to find time to create a video, like a more, a more precise video about the strategy. So if you have questions, you can go ahead and ask. I will attend to all of your questions. All right. So let's get to it. Now, so this is GBP USD, right? Very popular pair. Before I taught you guys the ABC strategy, where you would wait for sweep of liquidity, you wait for market to break structure, and then you wait for the sweep and all of that, right? I taught you guys that strategy, and it still works, right? It works, especially on the higher time frame. And if you trade in direction of the trend, right, it still works. But that is not what that is not what I'll be teaching you guys tonight. What I will be teaching you guys tonight is just structure and liquidity. Just structure and liquidity. Structure in its simplest form. No complication, right? So the first thing you would want to do when analyzing any pair at all, you want to get the high. I'm going to just write the steps for you guys. So let's higher time frame narrative, right? You would want to get a higher time frame narrative as the number one thing. Higher time frame narrative. Then number two. So let's go to the higher time frame and look at what the higher time frame is saying on GBP USD. Now, so the highest I go actually is 1 month, right? The highest I go is 1 month. Now, what I want to get here is the overview of the market. I want to know what GBP USD has been doing for the past month, right? Now, so this is more like the overview. This is what GBP has been doing for the longest. GBP USD has been selling. In fact, we got our change of character. GBP USD was trending upwards from 2002 all the way, right? It was trending upwards. Then we got our change of character. I think that was 2007. So it means since 2007, GBP has been selling, right? So you're just going to go ahead and mark your trend. A lot of people don't mark their trend anymore because they feel like, oh, their eyes can see where the price is headed, right? And sometimes we end up seeing different things, right? When we don't mark up our trend, you're going to end up making assumptions based on what you want to see and not what the market is showing you, right? So you want to mark up your trend, your higher highs and your higher lows, or your lower lows or your lower highs, depending on the trend. So this is what price is doing. Now, and when you mark up your trend, it actually builds your anticipation skill, right? Now you know the next thing to anticipate, right? So this is what GBP USD has been doing since 2007 for the past 20 something years, right? For the past 19 or 18 years. So it has been breaking structures to the downside. Now, so since the trend is bearish on the monthly time frame, you would want to also figure out the zone that was responsible for this break of structure, right? Now, if you agree with me, this was the zone that was responsible for this last break of structure. This was the zone. And this zone also responsible for the last, for this current break of structure that we have here, right? Now, and price is at that zone currently. So GBP USD, it's like price has gone back to the zone that was responsible for the change of character, sorry, for the break of structure to the downside. So what then is our anticipation on this higher time frame narrative? That price is going to what? Most likely give us a new leg down, right? To create a new lower low, since price has been trending to the downside. So we're anticipating that price is going to sell from this zone all the way down. But remember, this is a monthly time frame, right? So we, in as much as we've gotten our narrative, our higher time frame narrative, we cannot just start selling right now. Of course, we know that price is going to start selling from this zone, but we cannot just start selling because this is a monthly time frame. That means it takes 1 month for each of these candles to be formed. So it means price is still going to do a lot of things, right? So many things is still going to go on here before this particular candle is closed, right? Now, so having established that we are bearish on the monthly time frame, then you want to go towards the weekly time frame to mark your levels. So number one, I said on the monthly time frame, you get the general narrative of the market, right? Where the market is trending to, right? Then on the weekly time frame, you mark your what? Your key levels. Are you guys still following? Let me know in the comments if you're following. Let me know quickly so I can continue. Are you guys still following? Okay. You guys are still okay. Let's go. So I said the higher time frame you get the monthly time frame you get the narrative, yeah. Now on the weekly time frame, you just want to what mark your key levels. Pay attention to this. You mark your key levels on what? On the weekly time frame. So let me take this so it doesn't confuse you guys. Let me take this up as well. Right? So like we already established from the monthly time frame, right? This was the zone. It was from here that price sold to give us what? Give us this break of structure, right? So we want to look out for the key level, for the level that was responsible. The other block, I'm talking about the other block, the zone, right? So we are going to look out for the other block that was responsible for this break of structure, right? So if you look closely, you're going to see that we have this other block here. Now, so what is our anticipation? Price is all about liquidity, right? Since price is all about money, we know for a fact that price is going to always come back to grab this liquidity point that was responsible for what? For the break of structure. Look, let me use this narrative. Price is more like, some women, right? They love money. Where money is, they'll always go there. Apologies to the ladies in the house, right? I just want to use something with women these days, right? They just want they just want to like, get money. So wherever there's money, they don't even mind if the person is okay or not. They just want to get money. That's where there's liquidity, price will always go there, especially when that liquidity has an imbalance or break structure. Where that liquidity zone has an imbalance, break structure, or price moved impulsively from that zone. So what am I trying to say? I'm saying that price is going to what? Come back to this weekly key zone. So this is our weekly key zone. We are anticipating that our price is going to come and tap this zone before we get another leg down. So since we are not there yet, we are going to be looking for buys to the upside. Remember, our bias is sell on monthly time frame, right? But since price has not gotten to our key zone on the weekly, we are going to what to be looking for buys until we get to the key zone, and we are going to exit the market. We are going to exit buys and then just start looking for sell opportunities. So for now, these are our key zone buys to the upside. So having marked out your key zone on the weekly time frame, then you can what go to your 4-hour time frame. You go to your 4-hour time frame. Now on the 4 hours, remember you've established your higher time frame direction, right? You already know that of your key levels on the weekly. Right now you are on the 4-hour time frame to look out for the current trend, right? You look out for the current trend on the 4, so you can pick your key zone, so you can pick your entry point. So now we are on the 4 hours, right? And we are going to what, to be marking up our trend on the 4-hour. Yes, we know that price is bearish on the monthly time frame, that's for sure. We've marked up um, our weekly key point where we expect price to get to. Now we want to pay attention to the trend on the 4-hour. And so we are going to start marking up our trend on the 4-hour. So if you look closely, this is what price has been doing, right? We got a change of character here. We got a change of character here when price broke this high here, right? And after that, we got another break of structure to the upside. We got a break of structure to the upside, and we got another break of structure here as well to the upside. Right, so this is actually a major break of structure to the upside before this retracement. Now, so what do we want to do now? Remember, I said so the first point is the higher time frame narrative. The second point is what? Weekly key zones. Then the third thing you want to do is what? Is 4-hour trend. 4-hour trend and 4-hour trend and POI. 4-hour trend. Okay, the fourth thing is what? POI. So this is just the fourth thing I look out for in the market whenever I'm analyzing a pair, right? The first thing, higher time frame narrative. Number 2, weekly key zone. Number 3, 4-hour trend. And number 4 is my POI, right? Now since we've established that price is bullish now on this trend, right? On this trend right now, we want to do what? We want to pick a point of interest that is high probability, right? We don't just want to pick a random point of interest because we've established that price is bullish and all that. You just want to jump into price at any point. If you do that, you're going to lose money, right? So what we want to do is we want to jump into the market, or we want to get into the market where there is high probability, right? And then there are 3 things that I look out for when picking a 4-hour POI. There are 3 things I look out for. Number 1 is my POI must have an imbalance. Number 1, there must be imbalance. Let me write it out for you guys. So for the POI, there must be what? Imbalance. What happened? Okay. There must be what? Imbalance. Number 2, there must be impulsive move. Impulsive move, right? And then number three, there has to be what? A break of structure. Break of structure. So these are the 3 things I look out for at my POI. POI. So my POI must be an impulsive move from that zone. They have to be what? A break of structure. So now we are going to apply this. We are going to apply this and pick a point of interest. So since we've established, okay, since we've marked up our trend on the 4 hour, right? Where is a suitable, let's look for a suitable POI that meets our criteria. So let me put POI criteria. POI criteria. So let's look for a POI that meets all our criteria. So this was the last break of structure before this impulsive move to the upside, right? Before this is the last break of structure before this move to the upside. There seemed to be a tiny break of structure here, but it's negligible, right? We are not paying attention to it because it doesn't meet our requirement. So this is the last break of structure with an impulsive. You can see the candle that was that actually broke the structure. Just look at the candle. Look at this candle. See how long the candle is, and there is no overlapping of candles. See how long the candle is. See how huge the imbalance is, right? So we then want to look out for the candle that the last candle before this impulsive move, and this is the last candle before this impulse. So this is the last candle. So we are just going to mark only the candle. We're going to mark up only the candle. Right now, this is what this is our invalid zone. And we're also going to take, look below if there is another valid zone, right? We have another valid zone here as well. So we have two valid zones on GBP USD, right? This zone and this zone. This zone is also very valid because of the impulse. Look at how large the imbalance is, right? So we expect that price is going to definitely come to this zone much later, right? But for now, this is the closest point of interest to the price. So we want to what? We want to take advantage of this opportunity that price has presented us, right? And look out for. Can you guys still hear me? Let me know in the comment, please. Let me know if you can hear me. Okay. So I'm going to give room for questions when I'm done with all of this, right? I'm going to give room for questions, and if you don't get it, don't worry. We're going to go over it again, right? So like I said, this is a valid point of interest. Why? Because it has an impulsive move and also a break of structure, right? So this zone is now let me tell us the psychology behind this point of interest. So that when you're on your zone, you're not just doing it randomly. You know why you're actually selecting that zone. The psychology behind it, behind this point of interest is for price to move with this kind of impulse, right? It means a huge amount of deposit was made into the market. It means there was a huge inflow of liquidity at that exact point. And that was why price moved impulsively. So if the liquidity is huge enough to move price the way it did, it means price is going to always respect that zone. It means when price revisits that point, there is going to be a reaction. There's going to be a rejection from that zone. Why? Because this is an institutional fund. This is not my $100 or $1,000 or $10,000. We are talking about billions of dollars, hundreds of billions of dollars, right? Because GBP USD is one of the most traded pairs, right? Is among the top 3 most traded pairs. So if GBP USD is among the top 3 traded pairs and a liquidity can come into the market and move price with this kind of impulse, you can imagine the kind of amount that money was. So when you're selecting this zone, you need to know that something serious happened at this point. That's why you need to be very careful with your point of interest. And that's why before you select your point of interest, you need to be sure it meets these three criteria. So now, having selected our point of interest, we now want to what? Go to our final time frame. So remember, we started from what? The monthly time frame to get our overview, then the weekly time frame to mark up our key zones to know where price is going to get to, right? And then our 4 hours to what? To get our current trend, what the market is doing right now. We don't care about what the market has done, right? You cannot make money based on what the market has done, right? Because that chapter has closed. It's more like a dead person. When somebody dies, that's it, that's the end of it, right? You can read about the person's biography and get to, read about what the person has done, the kind of life the person lived, to get to know the person, right? But that person is gone. You're never seen that person again. That's how it is in the market. Once the market is trending in a new direction, everything that happened is already a closed chapter, except when price get to a rejection zone, maybe a resistance zone or a support zone, right? Then you can pay attention to it. But as far as price is not within a resistance or support zone, we don't care about what has happened previously, right? So we now care just what the trend on the 4 hour, right? So now we've established our trend on the 4 hours and we marked up our key zone. So we now want to go to our last time frame, which is the 15 minutes. The 15 minutes. So we started from the monthly to the weekly to the 4 hours and 15 minutes, just 4 time frames, right? Now, what are we looking for on the 50 minutes time frame? We just want to know the candle that was responsible on the 15 minutes. Because if we want to take, the reason why we are going to the 15 minutes is because if we decide to take our trade from this 15 minutes point of interest, we are going to have a very wide stop loss. So imagine if we decide to do this, right? We are going to have this as our stop loss, right? See how wide the stop loss is. And I did not cover this low, right? I only cover this candle. I only cover the whole this low too as well, right? The stop loss is going to be very wide. But let's go to the 15 minutes time. And now I'm going to target this high because we expect price to give us a new high, right? So we target this high as our take profit and 1:3, right? With this current stop loss. Now let's refine it. Let's go to the 15 minutes and refine it and see. Someone is complaining with my phone. I can't view clearly. Okay, if you can't view clearly with your phone, I'm going to make a video, right? About what I'm teaching you guys right now. I'll find time and make a video. I stopped posting on the channel because I took you guys knew when I created the channel, it was because of you guys, not because I want to come to YouTube and make money, right? That was not the motivation from the start. That was why when I stopped, the classes with you guys, I stopped making videos. So, but since this is a new information, I'm going to try to make video, a normal video and post on the channel for you guys. So I believe you'll be able to see that clearly with your phone. So let's continue, guys. So to work to the 15 minutes time frame. We are going to the 15 minutes time frame to find out that particular candle that caused this catastrophe in the market, that pushed price aggressively. And this is it, guys. This is the candle. This is the last candle because after this candle, see how price moved. So what we are going to do is we are just going to cover only the candle, right? I'm going to cover only the candle because we don't expect price to break that candle. But we are still going to give room for stop loss and all that, but we don't expect price to break this candle because this candle is not just a normal candle. Every other candle you see here, of course, they all have story to tell, right? But there are some candles that you can ignore. But there are some special candles you cannot ignore, just like this candle, the last candle before this large imbalance, before this push to the upside. So now, why did we select this particular candle as well? Now, if you look within this 4-hour POI, this is the only candle that has an imbalance, that broke structure as well. After this candle, price moving possibly to break structure. So you can see that price broke structure on the 50 minutes. This is an internal structure, right? So price gave us a break of structure within the internal structure, right? And left a huge imbalance between. And this is what an impulsive move as well. So on the 50 minutes, we found a candle that met our criteria or meets our criteria. So we're only going to just mark up the candle and what expect. So this was the markup I had earlier. Expect price to come and visit this candle and give us a push to the upside. So remember so I'm going to place a new buy order from this zone now. Let's compare these 4 hours and this. Let's compare the 4-hour and our 50 minutes order block. Let's target the same high, right? Okay, you can see that now this is 1:3. Meanwhile, this 50 minutes point of interest is 1:10, 10.77. That's almost 1:11. I can even decide to make it 1:11. So, like, if we decide to go from the 4 hours, we are going to have just 1:3, right? But if we decide to go with with the 15 minutes point of interest, we are going to have 1:11, right? So you can now, for those of you that swing, right? I swing trade sometimes. So for those of us that swing, right? If I take just this trade, I can just be done for the whole week. Just one TP. Just get 1:11, and then you're out of the market. Compared to somebody that is looking for 1:3, 1:3, and then the person is looking for how many trades? Looking for 10 trades. And out of the 10 trades, the person will get to win like 4 or 5 or maybe even 3. And that 3 is 1:9 minus the losses. So you can actually just take one trade and then you're done for the week. You can take one trade and you're cool, right? But then you have to understand this concept I just told you guys. You have to understand this critically before you can, take this type of trades and hold. Because it's not easy to hold trade, though. I believe you guys know already. So what? So we are expecting price to give a very, very nice reaction from this zone, right, to the upside and give us a new break of structure. So our take profit will be to target this zone, right? But this does not mean you hold the trade till here. You can decide to do your 1:3, 1:4, right? Depending on your trade plan, depending on your trading plan, right? But I expect price to come and give us a new change of character. Sorry, a new break of structure here, right? Now, this limit, now with this, you can go ahead and set a limit and wait for price to activate and then give you a good ride, right? But you can also decide to wait for a confirmation entry, right? You can decide to wait for confirmation entry. What do I mean by confirmation entry? This is my confirmation entry right up. So now, if I am going to be busy, sometimes if I'm going to be busy, yeah, I'll go ahead and set my limit so that even if I'm not, watching or I'm not at my desk, price can just come here, tap into this point of interest, and either give me a take profit or a loss, right? But if I'm going to be at my desk, if I'm going to be watching price, if I've set an alert and I'm waiting for price to get to that zone, I can decide to just chill and see what price is going to do at my point of interest, right? Because you are actually going to have more win rates when you wait for confirmation entry than when you set aggressive entry. Let me try to slow down. So what I was saying is, we started from the monthly to the weekly to the 4 hours, and now we have 15 minutes. We've picked our point of interest. Now, so what I'm telling you guys now is we have two type of entries, right? We have the aggressive entry where you can go ahead, pick your point of interest, set your limits, right, on your MT5 or whichever trading platform you're using. You set your parameters, and then price will come to that zone, give you a take profit or a stop loss, right? Because those are the two options we have, right? Or you could decide to say, okay, no, I don't want to set limits. I just want to wait for price to get to that point, to get to my point of interest before I would take a trade. So we are then going to remove all these our buy positions, right? Because now we are waiting for price to come to this zone, give us a reaction, and then we take a trade. So for the confirmation entry, you want to see price give what? A change of character after tapping into your POI. So let's say, for example, after tapping into this our 50 minutes POI, right? We want to see price do something like this. Let's say price was selling just like our price is right now, and then price taps into our 15 minutes and then push to give us a change of character, right? Now, this change of character, once we see this change of character here, right here, let me use a different color. Now, once we have this change of character at this point, we then look for what? The order block that was responsible for that push. And this is where we place our limits, right? We then set our limits and we wait for price to come and give us to tap into this zone. Since we've seen our confirmation, for price to tap into this zone, then we can ride it. And another thing with confirmation entry is you are going to even have a more even, right? Because price has given you a change of character already. So the last low you created now becomes what's your stop loss, right? And you can then decide to ride it all the way up, or whichever your risk to reward is. So you can just set your take profit and just ride it to that point, right? So now with the confirmation entry, you're going to have more win rates compared to the aggressive entry. But the downside of it is there are possibilities of you missing trades as well. So imagine waiting for price to get to your POI for maybe few days or maybe even for 1 week, and then price gets to your point of interest and it gives you a change of character, quite all right, and then it refuses to come down to your to the other block that's responsible. You're going to get mad. In fact, this is going to even be it's it's going to be a psychological problem for you, because you want to be chasing the trade, because you'll be like, I've been waiting for you the whole time, and then you want to snub me. So you want to start chasing. You want to start chasing the market, and this can lead to making impulsive decisions that will, you know. So if you want to be using aggressive entry, ensure you are mentally strong, right? If price is not looking like it's coming down to your zone, ensure you can take it. So instead of you chasing the market, you want to be patient. You want to wait for price to give you another opportunity. But since you already know that this is why this strategy is very, very beautiful, right? Now, since you know that price is going to keep trending up until this zone, which is our take profit, all you want to do is look out for more opportunities within this zone. So this will be our swing, right? From this our POI to this high will be our swing. So since we know that price is going to buy, all we are looking for is continuation of the buys. So when price gives us a break of structure, right? Let's say price gives us a break of structure, we then pick a POI based on this requirement on the 15 minutes now, not on the higher time frame again, right? On the 15 minutes, the price gives us a break of structure. Let's say price does this. let's say price moves from here and then it comes down here, let's say do something like this, and then goes up again to give us another break, right? We want to what? Mark out this zone as our new POI, right? Why? Because it broke structure, number one. There's a huge imbalance, number two, and there is an impulsive move, number three, right? So we then expect price to what? To come down to this zone, tap into it, and then continue the move, right? Until we get to our TP. We can just keep looking for opportunities like that until we get to our TP, right? So instead of chasing after the market, you just want to chill, right? And just see the opportunity that price will keep unfolding. So this is why I told you guys that I don't want to be trading so many pairs anymore. Why? Because when you are trading so many pairs, you would not be following up each of these pairs like this. So let's say if price come to this my point of interest now and give a change of character, what I'll be doing for the rest of the week or for the next week is to look for buy continuation all the way up, right? So I want to milk this opportunity all, and who knows? Although sometimes price can move impulsively to the TP, right? But there are sometimes price can bounce around, give you opportunities, maybe one or two opportunities, including the first opportunity you took. That's three opportunities. So you can get three opportunities before price gets to the TP. So imagine you get three opportunities and they are all wins. You're done for the week, right? So just pair can give you that, right? Or you can even be lucky, two pairs can give you that, or three pairs, depending on how many pairs you have on your watch list. But when you have too many pairs, what you're going to be getting most of the time is just the first opportunity, right? Because you will not be available to catch the rest of the continuation. And because there are so many things you're focused on, right? You'll be distracted. So as a human being, if you're focused, somebody that's focused on one thing is more likely to get results than someone that's here and there, right? That's why they say jack of all trades, master of none. So when you're trading multiple pairs, right, up to 10, 20 pairs, you cannot build that kind of a relationship. So, okay, let me put it this way. Imagine you're dating just one person, just one lady, and then there's another person that's dating up to 10 ladies. Who do you think is going to have peace of mind? Who do you think is going to be more put together? You understand? That's how it works. That's how it works with this thing as well, right? So if you're here and there, you will not be able to capture these continuation trades, and that's you missing out on money. So you want to, have pairs you resonate with, pairs that does it for you, right? And then you can, milk opportunities as they come. Okay, so guys, this thing I just told you guys now, I think I have it on gold, right? I have the continuation trade I'm anticipating on gold. Okay, okay, let's analyze gold then, because this is a trade that might play out tomorrow. So gold has always been bullish. There's no need, if you're analyzing gold, don't bother going to the 1 month time frame, because it will not help you. Gold has been buying since the inception, right? Gold has always been bullish since 1990. What? Since 19. Let me get to the end of this. So gold has been bullish since 1833. At that time, none of us have been 1833. What? So gold has been bullish since 1833. You can imagine that. If gold has been bullish since 1833, I mean, and there is even more. There are more reason for gold to keep buying, right? Because of the war going on in the world. Gold. If you look clearly, since 2024, gold has been bullish since. Not since 2024. I think since the Ukraine-Russian war, right? Gold has been very, very bullish, right? Because when there is war, let me tell us why gold is always bullish whenever there's war, right? Let me just digress a bit. So whenever there is war, countries would move their funds, right, from their countries would what would put their treasuries, treasury they call it, in gold, right, instead of their normal currency. Investors will be pulling out their funds from the countries that are affected, right, and they'll be holding gold. Countries, right, they will put their reserve, right, they put their reserve in gold so that even when the war is over, right, they still have something on gold, and probably that money is even like, as the war is going on, the gold is actually like trending up. So even regardless of the war, they can still be making profits from their reserves. So this is more like a backup plan, because when the country is in a war, right, the value of their currency will be dropping. So the best thing the best thing for the economy is to what, is to put their treasury or their reserve in gold, so that after the war, imagine if Ukraine, for example, imagine if Ukraine like put all their reserve since, I think, before the Ukraine war was 2022. I don't want to remember that because it's a sad memory. I was there when the war started, so you can imagine that. So the war started in 2022, where the price of gold was $1,600. Right now, gold is 3,000. Gold has done more than 100x. So imagine if Ukraine were smart enough to like put all their reserve on gold. That means they would have made more than 100% of their money. You can imagine that. So even when the war is over, their reserve is still intact, right? Or you can imagine that. And other countries too that have gold as their reserve, since 2022, they would have made more than 100% of their money. And this is not small money, right? So they are not even after, all these countries, they are not even after big profits. Investors with big money, they are not after big profits. Imagine if you have $50 million, just 10% of that is serious money already. You can imagine. And these countries have up to billions of dollars. So imagine getting 100% of your billions. So that's it. So that's why gold is always trending up. And that's why gold will always continue to buy, because now there's war, right? The Israel war. After Israel, who knows the next country that's going to start up a war, right? So these countries are so smart to put their money on gold, even investors. And that's why you see that gold has always been bullish since forever. So let's get back to what I was saying. Let's even wrap up quickly because I need to get busy now. So like I said, there is no need doing any monthly whatever on good, right? Even the weekly self, you don't even need weekly like that on good. You don't need to, just 4 hours. For good, I just go straight to 4 hours. So that's why gold is very, very easy for me to analyze. Gold is the easiest pair to analyze. Why? Because all you need is just find out the current trend, get your what's it called? Get your valid point of interest, put your money. That's it. So gold is bullish, yeah. On the 4 hour, this was our what our last. These are what gold was actually downtrending. Gold was selling from this zone downwards, right? And then we got our change of character here. So we got our change of character. Why? Because this was the last. This zone. This was the last zone that was responsible for this break of structure to the downside. And price took out that zone here. So what? So this then becomes our change of character. So we have our change of character here. So since we have our change of character, we then want to look out for the zone that was responsible for this change of character, right? But that move already happened, right? I even took this trade back then. I took this trade. That move already happened. Now we have our anticipation is now what, to get a new break of structure. Since we know that gold is bullish now, we are anticipating that gold is going to come out and take this high, but that has not happened yet. So since this high has not been taken yet, what we are looking for right now is buy continuation. We want to keep buying gold until gold takes out this high, then we can start looking forward for correctional move to our point of interest, right? So now we are looking for just buys. So since we are looking for just buys, we want to look out for point of interest that meets our criteria. Remember the three criteria: impulsive move, break of structure, and imbalance. So we are going to then look at where price started, because from all this zone here, all these move down here is what is retracement after the change of character, right? And we see that the retracement actually ended here. So now we are trending to the upside. So on the 4 hour, you can even see that we have within this internal structure, you can see that we have a change of character here. We have a change of character. We have another BOS here, and then we have a BOS here as well. We have a BOS here, right? And we have a BOS here, but it's very, very negligible. Why? Because of ineffective price action. And I think I'm going to make a video on that, on ineffective price action. So I will explain in that video why I did not choose this point of interest, even though we have a break of structure, we have imbalance, we have all the criteria, but I still did not choose this zone. Why? Because of ineffective price action. What that means is, after this our last break of structure, price failed to come back to this swing, to visit this swing, right? So price did not come back to visit this swing. So it means there is a huge imbalance below this zone. So if we decide to take a buy from this point, we are going to be, these are an inducement. We are going to be used as we are going to donate money to all these guys, right? So we don't want to be donating money like that. So that's why this zone was not considered. Or even though we had a break of structure, even though we had our imbalance, even though we got all our criteria, right? So we want to pick a zone that meets our criteria within this our internal structure. And this is the first zone that we have. This is the first valid zone. This is the first valid zone. This zone has what? Imbalance. It has impulsive move. It has a break of structure. Price eventually broke structure from this zone. So this is a very, very valid zone, right? But it's far down. Price might not come to this zone again. You understand? Because gold is very, very intense whenever it's buying, right? So price might not come down to this zone again. So what are we now looking for? We are looking for another zone that has this criteria, right? And this is the zone. Okay, look at this zone. There is no imbalance here, so we cannot select this. This one, there is no imbalance. Why? Because price retraced to fill up the imbalance before the break of structure. So it's not valid. This is now the only valid zone we have. This is the only valid zone. So after the price moved impulsively to what? To break structure. Price moved from this point, from this zone to break structure, leaving imbalance in all of the candles. In the three candles that moved to break this structure, they all had imbalances. So it means this zone is very, very strong. So we are anticipating that our price is going to come back to this zone. That was my anticipation. I already took the trade. I already took profit out of it, right? So my anticipation was that price was going to come to this zone and give a push to the upside to give us, to take out this high, right? To push up and take out this high. So since price is here now, what I'll be looking for all through this week or all through next week on gold is what? Is buy continuations until we get to this zone. So I'm not wasting my time doing any of the anybody that wants to sell gold, I'm just looking at them because this is our target. Except the market decide to change character, of course, right? But as far as market structure is concerned, this is the net target for gold. Gold want to go and break this structure and continue trending to the upside. So all through the week, I'll be looking for buy continuations. So this is the zone I marked out that price was going to come to this zone, and price came to this zone, gave a good reaction. So what I did was I went to my 15-minute time frame to pick out my 15 minutes order block or 15 minutes point of interest, right? So I picked my 15 minutes, very tiny candle. I love it. I love tiny candles. Why? Because they'll make your stop losses to be very small. Tiny point of interest will make your stop loss to be very small, and that will give you a high risk to reward. So I marked up this. I placed it on an aggressive. entry, right? So I just placed my buy position, and my target was 1:4 initially, but then he went and gave me even more than 1:4 because price moved impulsively. It was an impulsive move. You can see before this retracement, price already gave like 1:10. Although my stop loss was not this small, sha. So, but I mean, that was like I didn't hold it up to this point, sha. But then that would have given me at least a 1:10, something like that, almost 1:10. But I didn't hold it up to this point. I took profit because because we got a confirmation. Okay, so I took the first trade, aggressive entry. Now I'm now looking forward to the second trade. The second, now I already have my confirmation on the 15 minutes. Now look, you just have a change of character here. So this is the change of character on good now. Change of character. So what is my anticipation? The price is going to revisit this last order block before this impulsive move, this last candle here, right? This last candle. This is now my what? This is now the trade I have set. This is the limit I have now on my MT5. That price is going to come back to, retest this order block and then would give a good 1:4 again. A good 1:4, right? So now this is now one thing about what's it called, aggressive entries. Aggressive entry will give you multiple opportunities. Why did I say that? Your first opportunity will be the aggressive entry, and then you take the second trade from confirmation, right? But sometimes it will be a loss. But then when you start winning, I mean, one win can erase four. For me, that targets 1:4. One win can erase four losses. So if you go by aggressive entry, you would have taken one trade, gotten 1:4, then I'm waiting for this for the confirmation entry as well. Gives you 1:4. That would be like 1:8 already from just you know one analysis, right? So, but the pain of this confirmation entry might not even come back. Price can even decide to just keep going like that, and you'll be pained. You know that, oh no, this zone is high probability. If price come here, you make so much money. But then price might not even decide. Price might decide not to come back, right? So, but you don't have to get mad. You don't have to start chasing the market. All you want to do is now is wait for price to give you a new zone, and then you can jump on it. Let's say, for example, look at what price is trying to do here. Price has swept this liquidity now. Price has swept this liquidity. If price decide to move now from this zone and take out this high already, this high. If price decide to take out this high now, price will not come down to this zone again. Price will just, let's say there's an imbalance, there's an order block, let's say there's an imbalance, there's an impulsive move, and our criteria, our POI criteria, price will not come down here again. Price will just come here. We visit this zone. I'm just assuming that that price move from here to break this. Price will just visit this zone and just keep trending. So what I will do now is what I'll then what look for my buy position from this zone instead of this POI below, right? And then I'll just ride it. So I think I will make a video on how to trade continuations as well, because if you know how to trade continuations, you don't need so many pairs. All you need is just few pairs and just be milking them, understand the direction of the pair, get the confirmation that you need, and just be milking them like that. That's all you need, right? And you make so much money. So guys, let me attend to your questions before we call it a night. Anyone with a question? Any question? Type your question in the comments. Okay, someone is asking what other pair am I having? Okay, now in regards to the pairs, you don't have to trade the same pair. You can also find your own pair and just trade. But for me, I trade just I trade GBP USD, I trade GBP USD, I trade gold. Yeah, I'm falling in love. I'm falling in love with gold seriously. I trade gold, I trade GBP USD, and I trade PY, GBP JPY, and NAS 100. NAS 100. These are the four pairs. NAS 100 is another pair mm, that you should check out. Of course, NAS 100 has also been trending for how many years now? For decades now. Let's go to the monthly time frame on NAS 100. You can see I already have my okay. Look on the 4 hours. You can see I already have my what? My zone marked up already on the 4 hours for NAS 100. But NAS 100 is trying to do me dirty. What I'm saying is NAS 100 came to my POI, fill up all these other blocks without tapping my POI, without tapping the candle. So now I'm afraid now because the next time price will come here now, since this imbalance has been mitigated, that means a lot of liquidity has already been taken. So it means price might come to this zone now and not be satisfied again and would want to take me out. So that's why I put this here. Patiently wait for what? For 15 minutes or 5 minutes confirmation at this POI. This one, there's nothing like, I'm not setting any aggressive entry because of what price has done. So I'm going to wait patiently until price give me a change of character within this POI on 15 minutes, not even 5 minutes. I'll remove this 5 minutes, 15 minutes. Then I will take the ride because I know that the price is bullish, right? And there's a new BOS, so I expect price to respect the zone, but I only take a trade after a confirmation. So you can check out this pair as well. This pair has been buying for the longest. How many years now? This is a monthly chart. NAS 100 has been trending ever since has been going up, right? Of course, there are retracement here and there, but like it has been bullish aggressively. So, I mean, if price, that means now the reason why I trade these pairs that are very, very bullish, like gold and NAS 100 is that if price gets to your valid points of interest with these are criteria, it means there is a high probability that your trade is going to play out. So you get that there is a high probability that your trade because price is moving in that direction. So that's it. So I trade GBP USD, gold, GBP JPY, NAS 100. Now this one is I also have the XY on my watch list. You can see I did so many analyses here and all that. I have the XY on my watch list. Why? Because it's the index of, you can see another wait patiently for confirmation also for this one. The reason why I have the XY on my watch list is because it's the index of dollar, right? So it means it does the opposite of what GBP USD does. So whenever I analyze my GBP USD, I'll come to the XY and do the same analysis. If they correlate, if they, if both make sense, right? Then I'll go ahead and place the trade with confidence because I know they do opposites, they move in opposite direction. So if I analyze the GBP USD to buy, and I also go to the DXY, and the XY is also saying price is going to sell from that same zone, that means the trade is high probability trade, right? So that's one thing. Now, for example, uh, now for example, this is the POI. This is a 4-hour POI on what the XY. But on GBP USD, we have trade almost at our what? At our POI. So this is not a high probability. This particular trade now is not a high probability trade. Why? Because price might come to this zone below because of this POI, this POI on the XY. But it's not always the case, right? Price can decide to what we have from this imbalance. The reason why I'm still going to check the trade regardless is because there's an imbalance. So price can decide to react from this imbalance. And by the time price gets to this imbalance, that's when GBP USD will be at our POI that we just analyzed. So price is most likely to what? Also give a reaction to the downside since price is selling, since price is creating lower lows and lower lows and all that. So price can just sell. So these are the pairs I have on my watch list. Any question? Okay, does news affect NAS 100? Yes, it does. It does. News affect NAS 100. And when there's news, you wouldn't want to set limits now. You wouldn't want to set limits. So that's it. Any other question? Ask your question quickly before I end the section. If there's no section, I'll just go ahead and end it. Okay, no question. All right, guys. Evening. See you next week. Now, earlier, I might decide to make this thing a weekly thing where we just come here, analyze, trade, and see how it plays out the week, right? We might be doing that either Mondays, yeah, maybe Mondays, right? Or Monday or Tuesdays, just beginning of the week. We can be doing the beginning of the week so that you guys can, get very familiar. So, guys, okay, someone is asking, what if price breaks your POI and start buying? Yeah, that happens a lot. Price can break POI and start buying, but the most important thing is to get a confirmation entry. Now, after the POI is broken, right, you want to get a what? A confirmation entry, right? You want price to give you a change of character on the 50 minutes time frame. Now, when you get a change of character on the 50 minutes time frame, you can then decide to take the trade, right? But it's not a high probability since price has violated the zone that was meant to be respected. But it happens sometimes, right? Price can break your POI and just even aggressively start buying. That happens so many times. So you want to use confirmation entry, get your change of character on the 15 minutes time frame, and then you can ride it. But when you do that, remember price has already broken your respected zone. So when you're riding it, don't be greedy anymore. Why? Because that's a change of character as well. For price to break your zone, that's more like a change of character. So it means price is going to like trend up and still sell, right? Maybe temporarily before it continues the buys. So you'd want to take profits early. So that because when price start retracing now, you don't start panicking and then you start closing trades and all that. So you want to take profit early when price breaks your POI and gives you a confirmation. So that's that for that, guys. See you guys later. Someone is asking again, sir, do you consider strong low or high from higher time frame, or they refine to your lower time frame? Set your price. I think I explained this already. I pick my entry point from 15-minute time frame, right? I pick the candle. I pick the candle on the 15-minute time frame and then put my stop loss a bit lower than the candle, right? Because most of the time, from my backtesting results, because I've been backtesting this, from my backtesting result, price will just tap the candle on the 15 minutes and then aggressively start buying, except price want to give you a stop loss, right? So in most cases, it will just tap the candle and start buying. So you don't even need a very wide stop loss. Um, Talking about strong lows or strong highs, we know we are not really paying, we are not doing all of that strong lows and strong highs here like that again. No. Here now we just want to get a trend, get the zone that was responsible for the trend, pick the order block on the 15 minutes, and place our trade. As long as our 4 hour trend, we understand what is going on the 4 hour in respect to the monthly and weekly time frame. So we don't really care about the strong lows. If we see a 4 hour POI and it's valid, we just go for it and then we refine it to the 15-minute time frame and then pick our entry, either an aggressive entry or wait for the confirmation. So, guys, no more questions. Good night.